Order book data shows whales are pushing Bitcoin into a narrower consolidation range, something I've been looking for a long time. Hey guys, it's Keith Allen. Hope you had a fantastic holiday weekend for those that were enjoying it, and that trading has been kind to you. Hey guys, it's Keith Allen, and we're going to jump into this thing. Sorry it's taken so long to get today's live stream out. I just did another live stream, so keeping things busy and keeping things moving. But I definitely have some stuff I wanted to point out to you as we're seeing some movement in the order book, and that is showing us obviously the direction things are headed. We also, of course, had a weekly close that was green. However, what was that number? Do you remember? If you've been following along, the levels that I have been telling you have been so important and so hard to beat. I'll give you 3 seconds. You could comment, by the way, if you want here. Thanks for joining me on the live streams here on X and on YouTube. Continuing to try and kick these out for you 5 days a week here during regular normal weeks. Of course, yesterday holiday, so I didn't do one. But so yesterday we got that close. Let me share the screen. We'll start on the candle chart, and then we'll move into FireCharts and show you what's happening here. So we did get the green close, but what we didn't get was a live close above. I said I was going to start on the candle chart. I lied. There's a candle chart. We didn't get a close above 69K. Looking at the weekly time frame, of course, we did get initially a trend precognition down signal. I will tell you that this did invalidate briefly yesterday when things spiked up, but so that takes a little bit of my confidence out of this signal here in the short term. However, it's regaining strength at this point, so may ultimately end up validating. But the big part here, I'm looking at this 69K level. It's just been a bear to beat, right? Since the beginning of March, we have been trying to validate an RS flip at 69K, and it just hasn't happened. All of these wicks below have been a sign of weakness up this level, but I don't want you guys to be confused. You know, on Friday, I posted something that said something to the effect of, we have strong support at 65 and also support at 60K. I'm fully prepared to go there. I'm not going to get shaken out. So a lot of people interpret that as me being bearish. My macro outlook is as strong as it has ever been, right? So I don't want you to be concerned about that in terms of what my perspective is. I'm just saying in the short term, we haven't seemed to have enough to move above this level, right? So I base those remarks around the stacked bid liquidity at 60K and what we have at 65K. And what we've seen here in the last 24 hours is, we've had ask liquidity coming down from above. You remember, what was it, about a week or two ago, about a week and a half ago, we had these two blocks show up in the 75 to 76K range. They quickly moved down lower. And just in the past 24 hours or so, we've seen them come down again. Now, literally in the past hour, they've started to move back up. So now this is a little bit of whale gamification happening in here, right? They're trying to herd liquidity down, push it into bids that they want to get filled. And look at this tip to tail action here with this, and this maybe they're trying to push it back up now. Maybe they got filled and they're trying to push it back up. We'll see how that plays out. But in terms of liquidity levels, we still have those areas of interest at the 65 and 60K levels, right? And a lot of thin air, well, not quite thin air, but thin liquidity between those ranges, which means if price does get down to 65, it could get lower. It could get to 63 pretty easy. And it crosses below 63, it could go to 60 very, very easily because there's thin liquidity there in that range. Conversely, to the upside, things are pretty stacked. And if I zoom out to a wider view here on FireCharts, you can see that it's really heavy up above here. This above 70K, you've got like over 200 million stacked between there and 75K. Meanwhile, there's like less than, like maybe 90, 100 million in this 65 to 67 range. So I want to see this area get stronger before, or this area fade before I have confidence in this move up above. Now, what's happening though is that price is getting compressed into a tighter range, and I've been saying for quite some time that having a range from almost 74,000 down to what's our current low is at 56.5. That's like a 30% range. Okay. And I don't consider that you may have a different perspective, and this is just my perspective, and that's okay. But that's a 30% range. And I don't consider that really a well-defined consolidation range. What I do like about it is there's some room there to make money in both directions, right? So as long as we're trading that wide, well, that's fantastic money making opportunity for swing traders and day traders. But in terms of um, going all in for that breakout, I'm not quite there yet, right? I had loaded up pretty good when we were down closer into the high 50s, and at that point, well, I started that way back in 2022 when we were at 15, so that's an average thing. But I had stopped buying once we got over 60. I had sold most of what I had bought over 60, and then looking to re-add to those positions. So was hoping we would get those dips down that haven't materialized at this point. So now for anything I add back in, I'm of course using my MTF mean reversion indicator to help me find those dips. And you can see we've had a couple of those. It's been pretty tight actually here. To get a real deep dip to buy. So I've been buying some shallower ones with just smaller entries, just to keep some capital turning and pick up these little moves when they come. Where was that? Here we go. So what was the last one? Was at 66 and change here, just on Thursday, and I got some really shallow ones. I don't even have on this chart because the deviation is even lower, but I have some really shallow ones that I picked up here over the past 24 hours. But those are tiny little orders, and I'm just really stacking them all, DCAing them all together to swing trade this. So that's an approach. B, will this keep going higher until a G20 currency shits the bed? I have no idea. I think G20 currencies probably are shitting the bed. A lot of them are, but the dollar has remained strong, and that's been confusing for a lot of people. I'm really just playing the charts, and not as concerned about all of these other little nuances that can affect the market, just because it's so speculative and it's hard to tell. But the charts give us some truth. The charts give us some clarity. The charts show us that we have not had the strength to RS flip 69K. And the charts show us that we have strong technical support with 3 key moving averages between 66 and 65K. That 21 day moving average is there at 66K. The 50 and the 100 moving averages are about to death cross at 65K. All of these areas look good to me. But in terms of what we're seeing in the order book at the moment, there might be a little bit of front running going on here with what came in at 66 and 67. So yeah, I like 65 a lot. I like 66 a lot. We may not get it, because there's still some buying going on here, and we have this liquidity coming in. Now, the fact that more bid liquidity is laddered down below 60K, well, that's interesting. That might create some opportunity. We'll just have to see how if this holds here. Let me zoom in a little bit tighter here, and you can see this is kind of the area of interest. Will this hold at 67K? Or are we going to go down and visit the 66 to 65K range? This would be very interesting to me. And it would be interesting to me not only because we see the confluence between the liquidity-based support here and the technical support, but this technical support has really got some historic importance. So especially that green 21 day moving average, that's one I'd really like to see hold. And if it does, that to me shows us a better potential opportunity for a foundation out of this. But quite frankly, since all three of these are so closely correlated right now, anything in this range would be, in my opinion, be strong. Wicking below this, wicking below 65K, then opens the door to 60K for me. And of course, losing this, which I don't think is really in the cards at the moment based on the liquidity we see. But if it did happen, if we did lose 60K, then I'm putting my chips here on this prior consolidation range in the 50 to 52 zone. So at the moment, not much sentiment for that. As you can see, if we look at the order book, there's just not really a lot down there at the moment. That can change at any time. Just like we see these blocks moving around, we could see a 50 million, $100 million block of bid liquidity appear here anytime without notice, and that changes the dynamic of things. So I'm always watching the dynamic between the ask liquidity and the bid liquidity in FireCharts to get a sense of what's going on. I'm going to wrap it at that. Got to go pick up some kids. Last day of school for my high schooler, and man, graduation tomorrow. This is crazy. This is crazy. Lots to celebrate. And by the way, if you're interested in FireCharts 2.0 and all the other cool stuff that comes with it, like all of these, there's literally a dozen other charts here in the MI dashboard, and all the tools that we make at Material Indicators. We're having a sale. You can get the promo code for that on our Twitter channel at MI_algos. But I will tell you straight up, also at materialindicators.com, you'll see it on the buy page that we're offering 25% off Premium Plus plans right now. And that promo code is we're extending the Memorial Day weekend sale. So I don't remember what it is. I got to look for you. I have to look. Okay. I'm just like you, just a normal guy trying to figure it out. What is that code? It is, I'm close. I'm really close. There it is. MDPP25 for 25% off at materialindicators.com. You can find the link on our Twitter page or X page, whatever Elon wants to call it here this week. So there you have it, guys. With that, I'm going to wrap things up. And yes, B, thanks for asking. A retest of 52K is possible, but not highly probable at the moment, in my opinion. It's possible because we had a prior consolidation range there and we've yet to retest it, but not highly probable, in my opinion, at the moment, because we just don't seem to have much liquidity in that range at the moment that would make us think that there's a lot of sentiment for it. This is 50 to 52. There's just not enough there at the moment to make me think that anybody really wants to go there. I would love to see us consolidate above 65K. 65 to 70K range seems like a good, tight consolidation range to build from. Let's see if it happens. And with that, I'm going to wrap it, guys, and we'll do it again tomorrow. Hope you have a fantastic day.